Hi guys, hope you're all doing well. This is Econoscope, your front row seat to the global economy. Inflation, interest rates, and oil shockwaves. A high-stakes week, moving global market from Lagos to Washington. This is one of those weeks where nothing moves in isolation. This week is packed with central bank decisions and market moving headlines. From Lagos inflation print setting the tone for households to Washington's Federal Reserve shaping global liquidity, to Tokyo and London deciding the next phase of monetary tightening, every decision this week feeds into the same global chain reaction. And just when central banks take the spotlight, geopolitics and oil markets step in, reminding us that a single headline from the Middle East or a trade deal between Washington and Europe can swing Brent crude, shift African currencies, and reroute capital flows overnight. In short, it is not just a week of data releases. It is a live stress test of the global financial system, with Nigeria and Africa sitting right in the transmission line. Beginning with Nigeria, inflation data is expected later today, Monday, 15th June 2026, with consensus pointing to around 15.6% year-on-year CPI. That is a critical number for policymakers in Abuja as persistent food and energy costs continue to weigh on households. Tomorrow, Tuesday, 16th June 2026, attention shifts to Asia. The Bank of Japan, BOJ, is scheduled for its policy decision, though Governor Kazuo Ueda is out sick, leaving his deputy to preside. Markets will be watching closely for any signal on yield curve control. On Wednesday, 17th June 2026, Calvin Walsh chairs his first Federal Reserve rate decision. His comment on inflation will set the tone for global markets, especially given the Federal Reserve's recent tightening cycle. Thursday, 18th June 2026, brings the Bank of England, followed by other central banks. The theme here is clear. Inflation remains sticky, and monetary authorities are cautious. The global narrative here is tightening monetary policy to rein in persistent inflation. Remember, UK inflation peaked at 11.1% in October 2022, and though it has moderated, the stickiness in services inflation keeps policymakers cautious. For Nigeria and Africa, these moves matter. Higher rates in advanced economies pull capital away from emerging markets, weaken currencies like the Naira, and amplify imported inflation. By Friday, 19th June 2026, geopolitics takes center stage. A framework deal between the US and Switzerland is expected to be signed as an MOU. Oil markets have reacted. Brent crude slipped to a 3-month low, around $87 to a barrel, while West Texas Intermediate (WTI) trades near $86 per barrel. Optimism about easing supply disruption is lifting equities. For Africa's oil exporters, for instance, Nigeria, Angola, etc., lower oil prices mean tighter fiscal revenues, while importers like Kenya benefit from reduced fuel costs. But risks remain. In the Middle East, Israeli Minister Itamar Ben-Gvir rejected compromises are tied to the US-Iran deal, insisting on dismantling Hezbollah. Brookings Michael O'Hanlon suggests a temporary reopening of the Straits of Hormuz is plausible by Friday, but a comprehensive deal is unlikely, with ballistic missiles and uranium enrichment still unresolved. For Africa, this matters as Middle East instability directly impacts oil prices, shipping routes, and inflationary pressures. Asian markets rallied on optimism. SoftBank fell on 10% in Japan. SK Hynix dropped 6% in Korea. Samsung Electronics slipped 4.2%, yet the Kospi rose 5%, and the Nikkei rallied. Investors are betting that geopolitical risks will be contained. Corporate headlines are equally striking. SpaceX surged 18.5% on debut, closing at $160 from an IPO price of $135. Elon Musk's wealth now tops $977 billion, making him the first world trillionaire. SpaceX's value at $2.1 trillion, giving most two companies in the global top 10. So, from inflation decisions in London to oil deals in Geneva, from inflation print in Lagos to rate decision in Washington, D.C., and IPOs in California, from Wall Street to Broad Street, the global economy is interconnected. For Nigeria and Africa, the message is clear. External shocks ripple through our markets. The challenge is not just to react, but to anticipate, build resilience, and seize opportunities in this ever-shifting global landscape. This is where we'll stop. For more insightful and interesting updates of this nature, follow Econoscope, like our content, react, reshare, engage, and tell a friend. Share our handle with your friend. See you in the next video. Bye.